Alrighty, traders, good afternoon, good morning, good evening, and welcome to this live session here on a Friday morning. I trust everyone is doing well, and I'm sure you got a lot of questions. We're going to go ahead and cover the Trump inauguration that's taking place on the Monday, the 29th of January. How's that going to affect the markets? Sorry, on the 20th of January, not 29th. And then we're also going to go ahead and discuss currency pairs like the US dollar CAD, Euro US dollar, CADCHF. We're also going to take a look at gold and see exactly how gold's set up. We're going to talk about smart money sweeps. What is smart money sweeps? What is smart money trying to do into the market? We're going to discuss that. We had a good example of something like that this morning. We're going to go and dive into that as well. But more importantly, traders, we're going to play some trades. And we're going to play some trades using our SmartEntry AI BOT. And I'm going to show you exactly how it works. I'm going to show you the details of that and how we can use it to benefit us in the marketplace. So traders, stick around. It's going to be awesome. I'll see you right after this. Alrighty, traders, well, welcome back and welcome to the live trading session today. We're going to be talking about quite a few things. Stick around, grab a cup of coffee. I certainly have got my Colombian coffee right here, ready to rock and roll. And I want to make sure that traders, that you take some notes, and there's a lot of things that we're going to cover. So we're going to go through these different things step by step. By the end of the session, you should be able to understand exactly market bias, where the market's going, why smart money sweeps liquidity levels, understand what that is, what that means, and how you can take advantage of that, and then also again how you can use trading tools to be able to help you to be able to trade the markets. Now, 2025 is certainly going to be a different type of trading approach. Every so many years, we have sort of changes to the market conditions. And when you have these changes to the market conditions, it's time to start readjusting and innovating your strategy and evolving your strategy to be able to fit the type of market conditions that you're trading. Now, it doesn't mean that you're going to have to trade a different strategy or change your strategy around a little bit. It just means you're making some adjustments to your strategy. And in most cases, with the 30 years of trading that I've done, in most cases, the only thing that you're really going to make a huge adjustment to is how you manage your risk. Really, that comes down to it. Because at the end of the day, traders, the market still does what it does. It still sweeps liquidity. It still hunts and creates liquidity. It still tries to rebalance insufficiency and rebalance equilibrium. It does the same thing. It just, the markets move differently, so the ranges change a little bit, and so you got to make some adjustments to your actual approaches. And so we've done that, and we're going to talk about that in this live session today. So let me go ahead and dive into the actual. Oops, this is not the. You're actually looking at the wrong screen here. So let me go ahead and change the screen. And this is what we really want to look at right here. There we go. All right, perfect. Now, traders, in the top hand corner, you'll see a big logo there that says book a call. Book a call. Now, if you have any questions about the strategies I talk about, if you have any questions about how you can get involved with Traders Network Club, make sure you go ahead and book a call. Traders, in 2025, we're making sure that every person that gets involved with Traders Network Club gets a call. We talk to them. We make sure they got the right product. They've got the right risk management. They've got all of that stuff set up correctly. Now, I'm going to also talk about in today I am going to talk about risk management, and I'm going to talk about how you should be managing your risk so that traders don't get to a point where they're blowing up their trading accounts, losing big amounts of money, that you always got funds available. Now, we have put certain things in place this year in 2025 to avoid long-term holds on trades, all right? We've gone ahead and put those in place. I'm going to talk about that in today when we talk about the strategy. But traders, very importantly, you've got to be able to, right from the get-go, understand what the best way is to manage your risk. It doesn't matter what strategy you trade in, you should always apply this rule in your trading. So let's go ahead and dive into that. So when I refer to this, let's go ahead and take a look at first, number one, we're going to take a look at what it takes for us to be able to manage our risk. Now, I've got this tool here. I just need to grab. Just give me 1 second here, and I'll grab it. And I'm going to go ahead and blank my screen for right now and put a whiteboard up. And so we're going to use this whiteboard to be able to explain it. All right, so here we go. So this is how you should start. So let's say, as an example, right, a person's got $100,000 to trade. All right. Now, if you've got $100,000 to trade, do you put all $100,000 into a trading account? The answer is no. All right. Now, you could put it into what they call a primary account, but then only allocate a certain amount of money into your actual trading account. So what is the right amount of money that you should be placing into your trading account? Well, anything between 20 to 40, depending, of course, how aggressive you want to go and how much you want to allocate, but anywhere between 20 to 40% of the funds are allocated to your trading account. Right? So traders, if you've got let's say 3 different strategies, then clearly you have to go ahead and divide that into 3. You go ahead and say, well, 60% of my trading account I'm going to put to the side. Now, I'm going to talk about the 60% in a minute, all right? So 60% of your capital is going to be available as backup capital. That is ultimately what's going to keep you in business. Now, I want you to think about it this way, all right? Some of your business owners and some of you guys do marketing, and I want you to think about it. As a business, there's a portion of your income that you put aside as your marketing budget. And then even with that marketing budget, you then only allocate a certain amount of money to each strategy that you're using with your marketing. All right. So you might have 3 marketing strategies, but what you're doing is you're saying, okay, I've got, let's say, 5% of my income coming in each month. 5% of my income that I'm using for my marketing budget. And of the 5%, I'm going to allocate, let's say, 1% to this strategy, 2% to that strategy, another 2% to another strategy. And so that's how you space it out. Now, trading is no different, right? The same rules should apply when you're investing money into strategies. And so as you got 100K, you're saying that my budget for trading is 20 to 40,000. All right, or sorry, 20 to 40%. So let's go ahead and say that 40% is your budget, right? Let's say 40% you want to allocate your trading. So you open up a trading account with 40K. Now, how would you manage that 40K? You would manage the 40K by simply looking at 3 different criteria. This is the criteria. We have aggressive, which means 1 micro lot for every $1,000. Now, I'm going to be very clear on this. This is not the recommended level, right? This is level if people really want to get aggressive, but they also understand the risk. If you don't understand the risk, I'm always going to say, make sure, traders, that you're trading with the lower risk tolerance, which is, here we go, 1 micro for every 3,000. And then, of course, probably the recommended for everyone that trades and starts trading, this would be your recommended starting point right here at 1 micro lot for every 5,000. Now, remember this. Now, this is key because a lot of traders get confused by this. This is extremely important right here. When we talk about $5,000 for every 1 microlot, we're talking about managing it based on the 40% of the equity allocation, right? We're not talking about the 100K allocation. We're talking about the 40. So let's go to, and by the way, this should never happen now in 2025 with our new trading approach. And we'll talk about our different trading strategies. But with the new trading approach, we're never going to get into long-term holds, all right? Those days are behind us. We're looking at cutting positions if the larger bias changes and moves against us. We're going to give the market room to move because we know that there's smart money sweeps, all right? So there are going to be some stop runs, and we want to make sure that we're out of the way of those stop runs. We'll talk about that in a minute. But what we want to make sure about is if the bias is definitely confirmed that we're heading in the opposite direction, we want to go ahead and start cutting loose. Now, the trades that we took from 2024 and earlier, we're going to continue to manage that the way we started off. That's not going to apply the new strategy, but any new trades that take place in the new year, these are the things that we're going to do, and that is cut positions. Now, I'm going to take worst case scenario, and I'm going to say, let's say a trader's down. Trader made mistakes. Trader over leveraged or did something, but he's down to 50% on his portfolio. Now, what is 50%? 50% on his portfolio would mean that he's 50% down on the 40K that he invested, which is 20K. So what are you down on the overall portfolio? And this is how you look at it. On the overall portfolio, you're only down 20%. All right? Now, traders, that makes a big difference because, yes, you have the shock of, hey, man, I'm down 50%. But on the total portfolio, you're really only down 20%. And so this is how you reduce your risk on your trading account, right? Because traders, we're not investing for short-term gains. We're investing for long-term longevity, right? Long-term returns so that we can convert this into a recurring income, all right? Residual income on a month-to-month basis. And so we don't want to be this fly-by-night stalker, right? That we come in, make a lot of money, get out because we liquidated. All right. Or we get margin called. Go in again, fund the account, make a lot of money, and then boom, in 1 month we get blown out of the park again. Because this is what happens. This is what happens with traders that are investing and not investing their money correctly. They are hit and runs. They get some good profits, they make good returns, but then they get liquidated and then they're out of the market and then they have to reset and restart all over again. Now, I'm not saying resetting and starting all over again isn't a bad thing, all right? I'm just saying that if this happens more often than not because you're blowing up your whole trading account, that becomes a problem. So it's important, traders, to be able to take these steps to protect yourself. Now, let me go back to this now. So we've got this setup right here. We're only trading we're only going to be trading the 40%. So we know, and let me just delete this. So we know that if I take on a risk and I'm down on my trading account, it is only a percentage of the larger picture. So if I was 10% down, it would really only be 5% down on the overall portfolio. All right, keep that in mind. All right, now what's important right here, traders, as we continue to pay attention to the details here. All right. If I look at as an example here, if I look at my account at 40K and I'm managing it based on this, all right, how else can I adjust my risk so that I can save on my margin? All right. And so there is another option. The euro US dollar has a 2% margin requirement, where the Canadian Swiss has a 4% margin requirement. So traders, if you're trading with, let's say, $5,000 for every microlot, all right, that means you're taking $5,000, you divide it by 40K. Let's just do the math here. That means you're trading 8 microlots based on this portfolio. So if you're trading 8 microlots, and let's say the euro US dollar a year, all right, you're trading 8 microlots, all right, on each trade, then that means then on the CAD Swiss, because the CAD Swiss has 4% margin, you can actually reduce your risk and only trade 4 microlots. All right. So the CAD Swiss is then only going to be trading 4 microlots. All right. And that's another way to manage your risk differently as per every currency pair. As an example, the pound has a 5%. The pound US dollar has a 5% margin requirement. Therefore, traders, you will reduce your risk per lot to accommodate for the fact that you're drawing more margin to trade that particular pair. All right. This should be, and I'm giving you a high level here, but this should be the starting point on how you start investing. All right. This is the starting point. I want to give you that first. Now, let's go ahead and take a look at, some setups. So we've spoken about that, spoken about risk management. Let's go talk about, before we get into the setups and before we talk about smart money, let's go ahead and talk about the inauguration. All right. On the 20th of this month, we have Trump coming into the White House and getting sworn in. When he's sworn in, I get a lot of emails and text messages and sort of notifications and people saying, in fact, inside the Discord channel, there's chatter about this as well. And the chatter is about what's going to happen when Trump comes into the White House. What happens on the 20th? Are we expecting major craziness in the market on the 20th of this month? And the thing is this. I want you to understand this, right? Everything that Trump is going, and this is the way I digest it, because certainly we don't know the details of what Trump's going to do, but we know a lot of what he is going to do. Not all the details, but a lot of what he's going to do. And so everything that is already sort of spoken about on the campaign trail are things like securing the border, deportation, right, of illegal immigrants. He's spoken about the wall. He's spoken about Mexico and Canada. He's spoken about the tariffs that are going to be hitting them. There's conversation taking place with both Mexico and Canada. We also know that Canada is going through some government changes. All right, there's going to be shifting power there, and so there's a bigger sort of partnership that may take place between Canada and the US. All right, I'm not saying buying Canada or Canada becoming part of it. I'm not getting crazy about things like that. I'm just saying there is going to be some communication. All right. Now, on the day, 20th of January, think about it logically. All right. How much more can be done that hasn't already been out there in the market? All right. Not a whole bunch, unless something crazy. Unless Trump comes in the White House and says, hey, listen here, guys, where's the football? Give me that red button. I'm going to go ahead and blow China out of the water. We're just getting crazy now, right? But that's the sort of thing that may create some craziness, right? But other than that, everything should be pretty much calm. Now I'm not saying that there may not be riots that's taking place. There may not be marches against Trump. Those type of things, they could certainly take place. Now, if it gets crazy, like burning down buildings and that type of stuff, like we had back in 2020, in 2019, 2020, around about 2021, when we have those type of things happening, that's always going to create a little bit of chaos. But it doesn't necessarily mean it's going to hurt. It's going to affect the currency market as much, unless, of course, they start getting in, the military, and it starts really getting out of control. But again, if that does happen, this is not going to be a strong move on the dollar. Those type of things tend to make people flee from the dollar because they see too much chaos and so on. Think about it this way, right? When there's war in certain countries, whether it's internal or external, there's always pressure on that currency. So those type of things would put pressure on the currency. It wouldn't really go ahead and boost it, and people will go, hey, let's invest in the dollar because there's chaos in the country. No, that won't happen. All right. Now, now looking into the 20th of January, I'm going to say, based on what I'm looking at right here, I'm not expecting major fireworks. We're going to get some liquidity moves. We're going to get some volatility in that, but I'm not expecting some major fireworks unless something really ridiculous comes out. All right, just want to put it out there. Okay, all right. Now let's get into the different currency pairs. US dollar CAD, Euro US dollar. Let's talk about gold. Let's talk about the CAD Swiss. And let's talk about market analysis, because ultimately traders, in order for us to be able to become successful in trading, we have to understand what the overall market bias is. All right. If we don't understand what type of model we're trading, now what is model? We're either in a buy model or a sell model. Now, buy models is very simple. I've done this on YouTube. I've done this on my shorts. I've done this on Instagram, on Twitter, which is X. I've done all of the stuff, and I've posted all of the stuff out there, right? And what is the one thing that I keep talking about? I keep talking about these setups that are developing based on AMD: accumulation, manipulation, and distribution. So when we talk about buy and sell models, what we're referring to is something like this. Now, let's look at this chart right here. This is the this is the US dollar CAD right now, right? So if this is US dollar CAD, what would this be? This would be accumulation, right? The market's accumulating. All right. So then if that's accumulation, what comes after accumulation? Price manipulates. So we see manipulation. Then what comes after manipulation? We see price distribution, right? So we're looking at accumulation, manipulation, and then distribution. Now, this thing is this. When we look at this type of setup, what model are we setting up here on the US dollar CAD? This is actually called a sell model. So the manipulation is what's creating the opportunity as the market reaches and takes out liquidity up here at the top, and then it looks to then distribute back down sell. This is accumulation, manipulation, and distribution. So we're currently, believe it or not, in a sell model on the US dollar CAD. Now, I know there's a lot of traders out there speculating where the dollar, saying, hey, you should just be a buyer. You should just be a buyer. Listen here, traders, it is not unclear to me that we're in a bullish bias, all right, on the US dollar currently right now, because we are in a sell model, but we're inside manipulation. We're inside that phase of the market, and that is manipulation. And the bias has not changed. When the bias does change, I'll be more aggressive to go ahead and do some selling again on the US dollar CAD. But currently right now, the US dollar CAD is currently in a bullish bias. And what we've done is we've created tools to be able to identify that exact same thing. Right here, you can see right here, what is the US dollar CAD? Here on the left-hand bottom right here, the bias is bullish, all right? Now, you can see that the master account, and I'll explain that a little later, what the master account means and what is it saying right here. It's saying here the master account has got an actual sell at 43.98. All right, I'll explain to you what that means. But the bias, traders, I just want to go ahead and make sure that you're clear on this. All right, the bias on the US dollar CAD is in fact bullish. There's no doubt about it. Don't have to question it. You don't have to post and send me out messages. Big dog, we're buying. We're bullish on the US dollar CAD. I get it. All right, I understand it. I get it. All right. But there's going to be a change. And the reason why I'm looking for downside movement in the US dollar CAD, I'm looking for reversal, is because I'm expecting it, because we're in this manipulation move. So because we're in a sell model, I am expecting it. Now, it doesn't mean that we can't make money going up here. It just means that we have to be cautious and wait for the market to confirm the sell model or do the sell confirmation before we go ahead and sell. Now, what are we looking for here on the US dollar CAD? We're looking for price to show a change of market structure. All right. So what would it be? Well, if I go to the daily time frame here, currently right now the daily time frame showing that we're inside a accumulation right here. All right. So what I'd like to see is if the market is creating new highs. So if we got the high here, you can see the high is holding up here at the top. So if the high doesn't break, then this is the last high. So that means that the last low right here is where we're going to anticipate price to move. Now, this is on a daily time frame, all right? We're only going to see a market structure shift right here when price takes out this level, all right? This level right here. Now, the 4-hour time frame can give us something a little bit closer up. So we look at the 4-hour time frame. And the 4-hour time frame, let's go ahead and move that to the 4-hour right here. The 4-hour time frame, where could we see a market structure shift in the 4-hour? Well, if we take a look over here, we have the price creating a high, creating a low. We sweep the low. This is the last high. Market retest that. Do we see a market structure shift? No. Price is still trading over here, and we need to see the market trade below this area right there. This will be a break of structure, not necessarily a market structure shift. We've got equal highs. We've got triple tops forming over here. So we want to see if the market's going to continue to move back down. All right. So we're not seeing the market structure shift. So there's no change in buyers. So what we do is we pay attention to the weekly closes. Now, I'm going to tell you, based on this and other pairs as well, what am I looking for? What is the thing that I look for every single week and every single month on the pairs that I'm busy trading? Well, currently right now on the US dollar CAD, I'm looking for the market bias to change. Where's it going to be? It's going to have to take out that low at 142.17. If we don't take out 142.17, we're going to maintain in this bullish bias. Now, it doesn't mean that because we're in this bullish bias that there may not be some selling opportunities, right? Because remember, traders, even though we're inside this range, the market can still find resistance and support on the lower time frame. So which means if you go down to the lower time frame, you can pick up support and resistance that you can trade off and make yourself 20 pips off those resistance and support levels. All right. And so when I talk about the master account, the master account is trade signals that I'm going to send out to these systems, to these bots, and these bots are going to be able to tell us where those entries are. So as an example, I've already sent out a trade signal to the on the bias, on the US dollar CAD. Even though the bias is bullish, we have a trade signal here saying we've got to sell. Now, this is where traders have the option. All right. You have the option when you look at these setups, and it says here the bias is bullish, but the signal is bearish. You could say, I'm not going to trade the bearish signal. I'm going to stand aside, and I'm only going to trade the signals in the direction of the bias. All right. The same thing as with the Aussie CAD, the New Zealand CAD. If the bias is in a direction and the signal comes out in a different direction, that just means, traders, that the overall bias or the midterm bias is in a direction, let's say bullish, but the short-term opportunities are indicating that there is a sell opportunity. But if you only want to trade in the direction of the bias, you can do that. If you choose that, hey, listen, I don't mind that we are in a bullish bias and I don't mind taking that sell because I see that the market is in a range, you can trade that. Now, if the market breaks out of the range, and the bias is bullish and we break out of the range and you get a sell signal, you might want to say, well, you know what? I'm not going to trade that sell signal because we're now breaking out of the range. So I want to go ahead and continue to follow the direction of the trend. All right. Very important, right? So you can see how much sort of leverage you have. Now, if we go to the euro, let's take a look at the euro US dollar, and let's go ahead and break the euro US dollar down as to what the bias is on this. So currently right now, I want to see the market trade above the high at 460. So we're trading at 300. We've got about 160 pips to go before the bias changes. So currently right now, the bias on the euro US dollar is currently bearish. All right. How do I know? Well, let's go to the system right here and let's take a look. What does the euro US dollar say? Direction of the bias is bearish. I've got no current signal. So right now, I've got no confirmation whether we're bullish or bearish. Nothing's been confirmed yet. We're waiting to see if there's any sort of opportunity. So there's no signal to buy. There's no signal to. So currently we're on the sideline. We're sitting on the sideline. All right, no signal. Let's go to the next one. Let's go take a look at the. Let's take a look at CAD Swiss as an example here. CAD Swiss right here. What is the bias on the CAD Swiss? Well, if you're not sure, let's go take a look at the system. What the system says. All right. So CAD Swiss is right here. CAD Swiss. What is the bias? It's bearish. We've just got a recent signal. In fact, here's the date. It was at 1830. All right. So 1830. Let's pop this open right here. 1830. Sorry, not that one. I want to do this. 1830. What time is that? That was about 1 minute ago. So 1 minute ago, we actually got a signal here to buy on the CAD Swiss. We got a buy signal. Now, traders, you can already see here that there are 2 entry points on here. There it is. 1, there's 2. So the master account has already signaled that we've got 2 buy trades. The break-even point here on this master account is at 63.43. Now, the bias is bearish. Let's go take a look and see, hey, would we want to trade the CAD Swiss bullish right now, even though the bias is still bearish? Well, let's go to the actual chart. Let's break it down and let's take a look. So here is the, and what I'm going to do here is I'm going to go down to the lower time frame. All right. Now, traders, I want to remind everyone that the market moves in waves, all right? Price moves in waves. All right, I've spoken about that a few times. It moves in a 5-wave structure, and then we have correction. All right. Now, the reason why the market moves in waves is because the market has 4 reasons why it moves. It builds liquidity, all right, or at least creates liquidity. It sweeps liquidity, which means it hunts for liquidity. It rebalances insufficiency and rebalances equilibrium. All right. Those are the 4 reasons why price would move. So I want you to think about it this way right here. If we're seeing the market doing this, right, what is it doing? It's creating liquidity, all right? But it's also hunting for liquidity. These may be external levels that the market's chasing after, external highs and lows. So what's happening is creating liquidity. There's liquidity being created here. We call it sell-side liquidity right here. Here is sell-side liquidity down here. And then, of course, it takes out this. So we see break of structure, break of structure. So it's indicating price is moving up. We're in an uptrend. But then what it's doing is creating this wave 1, 2, 3, 4, and 5 right here. So we've got a 5-wave structure. And because we've got a 5-wave structure, what's happening right here is we're going to see the market rebalance equilibrium, right? Price is going to rebalance. But it's only going to happen once the market completes this 5th wave. Now, it can happen in a 4th wave. We can get a rebalance before the market takes off. But we normally expect that off the 5th wave. And so we're going to see a market rebalance. And then, of course, once it rebalances, then it's going to start all over again and start creating liquidity gain. Now, when it rebalances, it is also hunting for liquidity, which means that any internal structure here, any lows that form inside here, this is all liquidity runs that the market's going to chase for. All right. We're going to see a liquidity run as the market hunts for those areas. Okay. And so we've got to understand that and understand why price does these things. Because now, when we take a look over here on the chart, what do we see? Well, traders, we see that price has gone ahead and done what? Created liquidity with a wave 1. Trace back, wave 2. All right, so this is where liquidity is being created. Now the market's got all these internal moves, and what's happened is price has gone ahead and moved up to a wave 3. Now it's come back down. Why? Because traders, once it takes out this, what is happening? Retail traders are looking to place stop losses below this. So this is where liquidity is going to be. And price is going to move up and complete that 5th wave. And when it does, we're going to see the market come back down south again. And so as you can see right here, The liquidity, the internal, the short-term liquidity grabs that we have here is coming from this right here. As the market creates these highs, it creates the liquidity there that got swept, liquidity here that gets swept, liquidity here that gets swept. And so once the market finds this and says, all right, good, I've got enough liquidity here to refuel, it's going to start rallying. Now, if you go to a larger time frame, you might even see insufficiency here. Let's take a look and see if we actually got that set up, because price will go ahead and rebalance insufficiency as well. So let's go to the daily. So look over here on the daily. What do we see here on this daily time frame? All right. Now, this is not insufficiency. This is an order block sitting over here. This order block becomes resistance for the market. And so what we're looking over here is we're looking at this to become the order block that price is going to respect, right? And when we see the market respect this order block, then what we're going to be expecting is the market to show some sort of reversal here on the lower time frame. So if you go to, let's say, a 30-minute time frame, let's see here. Check this out. Traders, you already seen this. Look at how the market's already started to shift right here. Yeah, we have a low, high, low. Now price sweeps the high. What does that become? That becomes a market structure shift right here. Now we can see the market come back down, maybe retest this area, maybe come down a little bit lower to go ahead and retest this order block sitting over here. And then what it's going to do is continue its rally. And where's the draw of liquidity? So when we see a market structure shift, we look for the external level right here, and this is going to be our draw of liquidity. So now we can say that if we want to take on some buys on the CAD Swiss, it's justified, right? It's justified because we see the market structure shift. We identify that even though the market is in a bearish bias, that there are some upward swings, and that the market is looking, let's go to the weekly here. The market is looking to go ahead and possibly look to sweep the high up here at 64.06. And then once we get through that area, here's another liquidity area up here at 66.33. So we can say that the price is trying to work its way up. Now, traders, this little indecision candle right here, if the market closes out this week like this, is that a problem? No, not necessarily. Why? Because traders, you have to understand, a lot of traders look at this and go, oh, indecision. Oh, price is coming down. This could also be, and don't discount it, but this could also be what we call an order block, and it's a bullish PDRA, which means this is going to create support for the next run. So the next run goes above here, and then it comes back. It now uses this as a support level. We call it sell side, right? It creates support, and the market continues. So anytime you see these type of things happening, this creates what we call bullish PDRAs, which is a support for the market as the market goes ahead and continues to move up. All right. So pay attention to those details. It's important. Now, traders, I did say to you guys that we're going to go ahead and look for some trades this morning. All right. So thanks for sticking around. Let's go ahead and dive into something right here. Okay. And traders, I've got a favorite guest, my favorite guest here. And there he is. Say hi to everyone.
Hi, Papa.
Okay, you shy? All right. Hello, my boy. I'll speak to you later, okay? All right. So this is how we roll, guys. All right. Let's go ahead and get into the trades right here. And so I'm going to go ahead and pop this one open here. And we're going to look for trades on the Aussie. Now, if you follow my Telegram channel, you'll probably see that there's some bonus trades out there. So these are going to be some bonus trades that you guys are going to get involved in. Now, before I go ahead and continue, I want to remind all our students, with our changes of our membership, right? With the changes of our membership, we've got different memberships with different risk management. Please make sure you click on the link here and book a call with our team to walk through the changes, to get the transition, to shift you guys over to the new changes. No cost to you. We're going to help you with the changes and adjust whatever needs to be adjusted. But make sure that you go ahead and connect with our team. Click on the link over here, or these in the description down below. You'll see the link in the description down below, right? So check out the description inside the actual video. You'll see that there is a link to book a call. Unless you go ahead and click on use the book a call here on this page, but go ahead and book a call so that the team can work with you and get you transitioned over to the new strategies, the new risk management tools, all of that stuff. And if you've got positions already holding from the old strategy, we're going to go ahead and help you transition over, not go ahead and close out anything, but help you transition over so that you continue to manage the other positions, but also look at new positions and new trading. And the reason why, because currently right now, with this strategy, we've got this strategy called, that's connected to this right here, called the hedge. What is the hedge on our SmartEntry AI bot? What is the hedge? Well, basically, traders, it's giving you buy and sell signals. Whatever is the last signal. So when I look at this setup right here, this is going to be the last signal that that our system has created. All right. So the last signal is going to be able to tell you that either it's bullish or bearish. All right. And that could change every 30 minutes. All right. And when it changes, it'll notify and on the actual EA, and it'll tell you that it's changed. Now I could go ahead and have my system automatically just trade anytime that the markets change. So I can go ahead and say to the system, I could say, switch this to automatic. And then if the market bias is bullish and the signal is bullish, put me into the trade. I can go ahead and do that. So I can have the system only trade in the direction of the bias. All right. All right. Or I can actually go ahead and just manually trade by doing what we're going to be doing today. All right. I'm going to show you the different options. Now, let's take a look at Aussie New Zealand dollar. All right. Aussie New Zealand dollar. It says that we've got a bearish signal. It took place this morning at 10:30 broker time. So what is broker time? Let's take a look over here. It is now 18:42. So that was a long time back, right? So let's take a look at the Aussie New Zealand dollar. Let's see what we are set up as an opportunity. So let's go to Aussie New Zealand dollar right here. And there it is, Aussie New Zealand dollar. All right. Now, bias, as you've seen there, our bias is currently, let's go back to it again. Our bias is bullish. Our signal is bearish. All right. So let's go back here. So our bias is bullish. Let's go down to the lower time frame here. This is the 4-hour. All right. Now, what do we see here in the 4-hour? In fact, let's go to the daily. All right. Here's the daily. So on the daily, what are we seeing here? All right. We're seeing, and I want to make sure that this is clear. Traders, if you're a trader that you don't understand technical analysis and you want to go ahead and just trade the signal that comes out, you can set the bot to just go ahead and trade the signal as long as in the direction of the bias. All right. So if you're like, I don't want to work out what the system, you can go ahead and do. Now you could also go ahead and say, I don't want to trade. I don't care about the bias, but if the signal comes out, I want to go ahead and trade every signal. You can do that too. All right. So you don't have to trade. All right. You don't have to trade the signal. All right. If the bias is in the opposite direction. All right. So you have a choice. You can trade the signal and the bias together. You can trade just the bias, or you can trade just the signal. All right. It's up to you. All right. Now, here on the Aussie New Zealand dollar daily time frame, what do we see here? We see that the market is sitting inside this area here. Now, we can see that the market broke out, swept liquidity right here. So we had liquidity sweep right here. So we had this as we talk about manipulation. So we had manipulation move, then we had the market distribute back down. Now, the market's come back up here. What are you seeing here on the daily? On the daily, all right, the bullish is bias on the weekly. But traders, if you actually look here, we've got a lot of resistance up here at the top. All right. Now, if you trade against the trend, and let's say, for instance, we're wrong and the market blows out, we're going to have a point that we're going to say it's time to close out positions. If the market's not going to stick into our trend, if the market breaks the major bias, we're out. We're going to cut our losses, take our losses, and readjust. All right. But if we're right, then of course the trade should go back down to this area. In fact, it should go down to that area and eventually start hunting for this liquidity down here. So this is sell side liquidity sitting over here and sitting over here as well. So we're expecting price to work his way back down. So right here, even though the buy is bullish, what I did notice here, if I go to the weekly time frame, I did notice right here that the buys may have been bullish, but it's sitting still here at the top, and we've seen a little price manipulation. So I'm going to say that I'm going to take a trade against the buyers. I'm going to sell Aussie New Zealand dollar, and if it doesn't work out, I'm going to cut my losses. If it works out, I'm going to make my money. All right. So what I'm going to do here is I'm going to go to my bot, and just by the way, traders, if you wanted to get access to this trading bot, inside the link down below, inside the video, in the link below, there is a link that you can get a 14-day trial. Try it out for 14 days. See if you like it. All right. And you're going to get access to all of these strategies right here. We got all of these strategies. Look over here. We got all of these strategies here that can be traded. You got the chaser, you got the hedge, you got the Dow, you got the max, you got the Dow. In fact, we've actually increased it. We've added some new. Let me go ahead and show you here. We've added some new tools right here. New systems. So here's the new systems that we added to the system now. We now have access to the market chaser signals, the triad factor signals, the hedge finder, the Dow remote, the DAX remote, the Asian market shift, and of course the market chaser max. So all of this, and this explains inside the videos, all of these signals are coming to you can choose whatever signal you want to follow. And we're giving you all of these signals. Try it out for 14 days. Check out the link inside the description. Go ahead and sign up. Try it for 14 days. If you don't like it, cancel. Let me put it to you this way. If you connect the system and the system the system doesn't make money for you in the 14 days, but you've tried it, you've traded for 14 days and you have the system connected. If it doesn't make money in 14 days, let me know and I'll refund the money that you pay for that system. All right? Cancel it. No problem. I'm willing to give you that because I believe that in 14 days, you will see the value in the system and you'll see how it can generate profits for you. Now, check out the links down in the description down below to get connected. Let's go back to our trade now. Here's our trade. Now, traders, I'm going to trade the Aussie New Zealand dollar right here, but I'm going to go ahead and sell. Now, you can see right here, traders, that I've gone ahead and set certain rules off. I've got, I don't care about the buys. I've set that to false. I don't care about my lower time frame confirmation. I don't care about the trading outside the range. Actually, no, I do. I'm going to set that up to true. But I don't want to trade outside the major bias range. And also, look, I'm going to trade in the direction of the signal. All right. So although I've got it set to false, I am going to trade in the direction of the signal because I believe in that signal. And then I've also got this market reversal here. So this means that traders, that if the market changes direction, all right, major direction, I'm going to be out of the market. I'm going to be out of that trade. All right. So I'm going to go ahead and take on this trade right here. I'm going to enter. There's the trade, and I'm looking for my 20 pip grab. I think the market's going to stay inside. You should already get a signal coming up on the bonus trades. All right. It's now being activated. All right. Now, traders, I want to say this. If you sign up for that free trial, right, for the 14-day trial, if you sign up for the 14-day trial, please book a call. Use the link over here. There's a link inside the description too. Book a call. Let us get with you to make sure that you've got the right settings and you know and understand how the tool works. Set up a call, traders. We want to make sure that you succeed. Make sure that you set up the call. That's going to be a sort of like a condition. You get the system, you book a call, we sit down with you, we help you with everything, we help you with the risk, we show you how it works, we show you everything. And then traders, if you're not successful from that, then call me up and I will certainly give you a total refund on that 14-day. Guaranteed. But you have to go through those steps. Sign up for the system, book a call, make sure that we help you with that setup so we can explain to you what needs to be done, because everyone's different and you might not know. We want to help you with that. Book the call, set it up. Now, let's take a look over here. We're in on that trade. Let's take a look at the here it is here. We're going to go with the pound. Now, the pound has got no signal in today. We've got no signal on the pound today. So let's take a look over here on the thing. What is the bias, by the way? The bias is bearish on the pound. So the bias is bearish on the pound. Let's just take a look at the pound here. And let's go pound US dollar right here. All right. Now, traders, with this candle here on the weekly doing this, if we close out like this, what do you think the expectation is going to be? I believe it's going to be bullish. Let's go to the daily. So we can see here the daily is trying to break above this. So we've got a bearish bias on the daily. We haven't really broken north. We've got a lot of wicks over here. I'm going to go down even down to a lower time frame. All right, now I can see why why we don't have a signal on this particular pair, because there's a lot of whippy lashy movement taking place. So here we got support. Let's take a look over here. How far can the market move? 70 points to take out that high. Traders, I think we're going to go ahead and move north, but let's take a wick. Oh, look at that long wick there. Man, a lot of whippy lashy taking place over here. All right. Traders, I can understand why traders would be on the sideline on this. All right, let's stand on the sideline. Let's not take a trade. Listen here, the great thing about trading is you don't have to make a trade. All right. Now, stick around, traders. We're going to talk about gold as well, and how the system can help you with gold as well. All right. For those that trade gold, go ahead and post a comment in the room right now. Let us know if you trade gold. Now, let's go ahead and let's take a look at the other pair. What is the other pair? The other pair is the euro pound. We got 5 trades in. So the master account's got 5 trades in on the euro pound. The break-even point is at 83.89. Now, some of you traders like to follow the system when the trade signals have gone certain amount of entries. And so now you can look and you go, oh yeah, 5 entries in. Break-even is at 83.89. Price is trading at 84.45. Oh, so we're currently actually in the money on this trade right here. In the money on that trade. So this trade should be paying out pretty soon. Okay. Because the break-even is at 83.89 and price is trading at 84.45. We're up about 50, 60 points on that trade already. Okay. Now, I'm going to go ahead and take a look at this in the meantime. Let's go take a look here. And let's see here on the euro pound. Here's the euro pound, right? What is the bias on the euro pound again? Let's go back here. Bullish bias, right? Let's go back here to the chart. And I'm going to go to, let's go to the daily first. Actually, I'm going to go to the weekly first. Oh, look at this. Traders, when the market turns like this, where's the direction going? It's going here. We're looking for price to move all the way up here, looking to sweep 86.20. So traders, it makes sense for us to want to be bullish on pound, on euro pound. So I'm going to go ahead and say this, that I'm going to trade in the direction of the bias. The signal is bearish. Oh, I see. Sorry, the signal is bearish. So yeah, I'm not going to trade it. I can do this, traders. I can go ahead and say this, that I'm going to wait. I want to trade in the direction of the bias, but also I'm waiting for the signal here to be bullish as well. So I'm waiting for the signal to confirm it. So I can go ahead and do this and say that I'm not going to trade unless this lines up. And if I do this, and now I go ahead and press buy, check this out. You see it says reset? And it says reset, traders, because we don't have the master signal that is bullish yet. So traders, I'm going to click this. I'm going to use the system now, and I'm going to allow the system to confirm when we have a bullish bias. So I don't have to sit in front of the computer. all I got to do is just say, hey, listen here, I'm okay buying, all right? And I've gone ahead and pushed the buy button. But I'm going to wait until our signal confirms the buy, and then I'm going to enter. And if I want to put some additional confirmation on this, I can go ahead and say, you know what I'm going to do? I want the lower time frame to also confirm that the bias is bullish. So I'm going to go ahead and add that as well. And also, I don't want to trade outside the range of the larger time frame. So I'm going to go ahead and put that to true as well. Set that to true. And I'm going to push OK on that. Now, traders, if I push the buy button, now it's waiting for all those confirmations. And when I get all those confirmations in, only then it is going to go ahead and put me in that trade. So what I've done is I said, hey, I'm waiting for all these confirmations to come into play. I'm going to go ahead and push the buy button. It's not going to do anything. It's going to stay. It's going to wait. It's pending. And it's going to pend. It's going to wait for the signals to change. Once the signal changes, it'll automatically put me into the trade. And now I know everything's lined up and ready to go. All right, traders, once again, book your call. Check out the description down below. You can get access to the bot, get access to this tool. Now let's take a look at the Aussie, the gold. Let's take a look at gold. So gold at the moment right now, all right? Let's go take a look at gold, yeah. Oh, I don't know why this keeps doing this. All right, so let's go take a look at gold. Gold, current right now. All right, so here is, traders, if we look at gold right now, what is the bias on gold? What is the bias on gold? All right, if you don't know, right, here we go. Let's take a look here. I'm going to go ahead and take a look at, let's see here, gold. Here we go. Here we go. What is the system saying? Now, the system's saying that we have a bullish bias on gold, right? Bullish bias on gold. No trade's been set up yet, but we've got a bullish bias on gold. Now, traders, at the moment right now, inside our tools, we don't, inside the bias in the tools, I don't have a gold EA. But this is the thing, traders. If you open up a trading account with one of our brokers, all right, as an example, we have got a good deal going on with both ACAP and SCM. If you open up a trading account, all right, and fund that trading account with $10,000 or more, I will give you an EA that you can use on gold only, all right? That will give you the signals for gold, will give you the bias for gold, and you can trade it just like that. And if the bias changes on gold, you can get the heck out of Dodge. But you can go ahead and use it. It will be a manual system. So you'll go ahead and place it, and you'll manually place it. So it'll give you the trade signal, it'll give you the bias, and you can decide on whether or not you want to follow it or not based on your own analysis, all right? Now, if you're interested in that, send us an email at support@tradersnetworkclub.com. All right. If you're interested in that, go ahead and send us a email. I'm going to go ahead and post it down here below. And send us an email to this email address down here. Let's see here. There it is. All right. So go ahead and send an email to support@tradersnetworkclub.com if you're interested in the gold EA. All right. All right. Next up, traders, let's go take a look at what is the analysis on gold. All right. So if we look over here, what are we expecting gold to do? Currently, right now, we're in a bullish bias. We're currently testing the top of the bias right here. Now, we haven't broken it. So which means that next week is going to be very important, traders. Why? Because next week might create a bit of manipulation, all right? We notice that we got this bullish order block right here that price is also trading in. So we could very much see the market manipulate the high, show some confirmation and reversal, and price moving all the way back down here to 2,500, all right? There's a very good chance that's going to happen. Now, the bias may not change on this particular setup. The only way the market's going to change bias if it takes out the low. But there may be some sell opportunities up here at the top if the market does confirm that. All right. Now, some of you might say, but Big Dog, I really don't want to trade against the bias. And I get that, especially when it comes to gold, because gold is a different beast altogether. But at least it's going to give you a good confirmation. So you'll know whether the bias is bullish or bearish. And then you can decide on whether or not the signal lines up. And if it does, you've got to trade. All right. All right, traders. That pretty much wraps up the session for today. I hope that everyone enjoyed the details of today's session. Do me a favor, guys. Subscribe to the channel. Hit the like button. Show some love right there, and comment on things that you enjoyed in the session, so we can bring some more of the stuff into play. Now, traders, I may be doing there's conversation that I might be doing some live sessions throughout the week in the evening. That is something either in the evening or early morning. That is something that's on the sort of the agenda to have discussions around. And if we do, make sure that you go ahead and check out the YouTube channel. Make sure you're subscribing. You'll get notified if we go live. And with that being said, traders, have a fantastic weekend. And I'm going to wish everyone an awesome 2025. Traders, check out the description in the channel. You'll see all the details of the book a call, as well as be able to get the 14-day trial on the bot. And like I said, if you book a call and you place, and we help you with the setup of the risk management setups and the EA. If you don't make money, in fact, if you don't make money to cover your fee, I will go ahead and refund you, as long as, of course, you follow those rules. This is FX Big Dog, signing off.